if you look at the instances, the 38 instances when the VIX has surged more than 30% in one day, and then the median forward returns, you can see that 1 month later, the median gains roughly 3%. That implies a 200-point gain for the S&P by mid-November. Okay, back to all-time high. So we would be buying the dip. And in general, we think October and the rest of the year has seasonal tailwinds. Basically, between October and year-end, we should expect the S&P to gain around 4%. That implies 7,000. But as we've talked about before, because the Fed's been on pause all year and then they're cutting in September, that's just like 1998 and 2024. And the S&P did even better into year-end, up 14%. So I think 7,000 is just the base case.
On Friday, October 10th, President Trump's True Social post on severe China tariffs sent immediate shockwaves. At 11 a.m. ET, the VIX surged over 30%, its 39th highest one-day spike ever, and the largest since December 2024. This extreme volatility, more than the 2.7% market dip, demands our analytical focus. The subsequent 4:50 p.m. official 100% tariff imposition triggered a swift downturn in futures and a massive crypto market sell-off over the weekend. This is now considered one of history's largest single-day crypto liquidations, akin to 2018 and FTX in 2021, though Bitcoin and Ethereum showed resilience.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
So let me do some macro, because there's been some turmoil in markets lately. It all started with Friday, October 10th, when President Trump posted this very long post on Truth Social. And there he was talking about his concerns about actions taken by China and what he called export controls. And he was going to respond with a massive increase of tariffs. Now that happened at 11 a.m. on Friday. And after that, the VIX spiked more than 30%. In fact, that was the 39th highest ever surge in the VIX. So it's unusual, and the highest one-day jump since December 18th, 2024. Now, the markets fell 2.7%, so it was a bad day, but the volatility is what I've been focused on. And then at 4:50 p.m. Friday, President Trump took actions and imposed a 100% tariff on China. Now, that caused a huge downturn in futures quickly during that short window. And crypto markets, which trade over the weekend, underwent a massive, massive sell-off. In fact, it triggered what is expected to be one of the largest ever one-day liquidations, the largest really since 2018 and 2021. And in 2021, that had to do with FTX. To give you an idea, someone posted this on Twitter that outside of Bitcoin and Ethereum, which held up well, look at things like Sui, or Cardano, which went from 80 cents to 30 cents. Sui went from $3.40 to 56 cents. So clearly a huge liquidation. But then by Sunday evening, President Trump said, don't worry about China. All will be fine. So in some ways, I guess that liquidation and turmoil over the weekend looks like it's largely going to reverse as we move through October. So that gets us to this point, which is that when VIX spikes happen, they usually happen at the lows. Now take a look here at the upper half of this chart is the S&P over the past year, and the bottom half is the VIX one-day percent changes. And as we highlight here, when you see these spikes in the VIX, one-day spikes, they usually happen at the low. So I think that's the case again. And in fact, the numbers prove this out.
However, President Trump's Sunday evening reassurances regarding China suggest this weekend's brutal liquidation may largely reverse through October. Crucially, extreme VIX spikes historically coincide with market lows. Examining the S&P 500 against one-day VIX changes reveals these surges often mark market bottoms. Statistical analysis of 38 instances where the VIX climbed over 30% shows a median 3% gain 1 month later, projecting a 200-point S&P increase by mid-November, pushing towards all-time highs, a classic buy-the-dip scenario. Moreover, October and year-end typically benefit from strong seasonal tailwinds. A conservative S&P base case targets 4% gain by year-end, implying 7,000. Given the Fed's pause and anticipated September cuts mirroring 1998 and 2024, a 14% gain is plausible.
That if you look at the instances, the 38 instances when the VIX has surged more than 30% in one day, and then the median forward returns, you can see that 1 month later, the median gains roughly 3%. That implies a 200-point gain for the S&P by mid-November. Okay, back to all-time highs. So we would be buying the dip. And in general, we think October and the rest of the year has seasonal tailwinds. Basically, between October and year-end, we should expect the S&P to gain around 4%. That implies 7,000. But as we've talked about before, because the Fed's been on pause all year and then they're cutting in September, that's just like 1998 and 2024. And the S&P did even better into year-end, up 14%. So I think 7,000 is just the base case. And as for Granny stock, individual stock performance, the top 5 performers over the past week were AMD, Lam Research, Strategy.com, KLA-10 Core, and Robinhood Markets. A lot of this is just AI again. And what helped AMD was the OpenAI strategic partnership where OpenAI was going to take up to a 10% stake. That caused AMD to surge 20% and reach an all-time high. We're happy about that. Now, for those who think we're in an AI bubble, just keep in mind a chart I've produced in the past. The most important company to watch is NVIDIA, and it's trading at 27 times forward earnings. Okay. It's got a lower multiple than Costco, which is at 48 times, and at Walmart, which is 34 times. Okay? And equally important that if you go back to 1998, September 98, which is when the Fed was on and then cut in September, Cisco was the same stock then that NVIDIA is today, and it was trading at 56 times forward earnings. Look at its PE. In a year and a half, it went to 210 times earnings. A 4x increase in its PE multiple. Okay, that's what I would say is valuations where you can be concerned about valuations. Now, the bottom 5 stocks over the past week were American Express, Bank of New York, Netflix, Meta, and Live Nation. And as far as themes go, the best performing theme was global labor suppliers, led by AMD, followed by Style Tilt.
Beyond macro, individual stock performance underscores AI's enduring strength. AMD surged 20% to an all-time high following a strategic partnership with OpenAI, including a potential 10% stake. For those wary of an AI bubble, consider NVIDIA, trading at 27 times forward earnings. Its multiple is lower than Costco, 48x, or Walmart, 34x. Historically, in September 1998, Fed pause, then cuts. Cisco, then an innovator like NVIDIA today, traded at 56 times earnings and saw its PE multiply fourfold to 210x within 18 months. This suggests current AI valuations, especially for leaders like NVIDIA, might still offer significant upside. The top performing thematic sector was global labor suppliers, driven by AI led by AMD. Despite recent turbulence, market data suggests resilience and validation of AI's continued dominance. We'll monitor these trends closely. Thank you for tuning in.